Most people have a little bit of a distant understanding as far as what economics is. A lot of people think about their high school economics course or, all of their economics or what they perceive economics to be is just based on what they hear on the news. The reason I think it's important for people to really understand what economics is because then you can begin to understand its limitations and its uses. A common example of this is I often hear people say, how the numbers don't lie. And while you could say facts are facts, and to an extent that would be true, economics isn't necessarily as clear cut as 1 + 1 = 2. It is a science and it does have formal testing, but at the end of the day, the people behind that science can skew the data. You see, different people out there decide which economic policies to evaluate, who to collect the data and how they're going to collect the data, and then you have a separate set of group of people analyzing that data, and at the very end of it all, you have someone giving a press conference or talking about it at the very end of it that may not even fully understand the information and data that they're talking about. So you can begin to see how economics begins to kind of have this, a little bit of a bad rep just because there's so many different people and hands on the same information that it begins to become skewed and biased in some way. Think about this scenario. I want to study out there how much people like their jobs. So I send out a survey and see if anybody responds, but no one ends up responding to that survey. So then I think about how to solve this survey problem and I decide, I'm going to give everybody who responds to the survey a $20 gift card. Well, you think about the type of person that's going to end up responding because of that $20 gift card. More likely, it's going to be someone who's poor or could really use that $20 versus somebody who's working a six-figure job. So you can see how this ends up skewing data unintentionally because what may end up happening is you have all these people that would have said they liked their job a lot that had higher income jobs don't necessarily respond to the survey, so you end up thinking people hate their jobs a lot more than what was actually true. Then there's a whole nother issue too as far as how you ask the question can actually end up skewing the results as well. Think about it this way. If I asked you on a scale of 1 to 10 how much you hate your job, you may say somewhere around a 6, just an example. But then let's say I ask you how much you like your job on a scale of 1 to 10, you end up saying a 6, and so you end up liking your job just a little bit more than you hate it based on that survey. But yeah, on the other survey, you ended up hating your job a little bit more than you liked it. And the reason this happens is because people that are kind of in the middle of the road that would have said 5 or maybe 5.5 or whatever, they end up kind of skewing one way just because of the way the question is phrased. You end up kind of giving more of a positive answer just based on the question alone. You see this a lot with surveys relating to politicians, for example. If you end up asking a survey of how much you like a politician and no one ends up giving you the results you want, you can end up phrasing it a different way and say how much you hate this politician. And because nobody actually hates this particular politician, you can end up going out there and saying, look, this is the candidate we want to go for because nobody hates them. Now, before I go any further on what economics is really about and how it can be used and its limitations, I wouldn't be doing it justice if I didn't give its formal definition. Economics is a social science concerned with the production, distribution, and consumption of goods and services. It studies how individuals, businesses, and nations make choices on allocating resources to satisfy their wants and needs, trying to determine how these groups should organize and coordinate efforts to achieve maximum output. Okay, so if you fell asleep hearing that definition, go ahead and hit that like button for me. Wait a minute, how's that going to work? Okay, so just think about that definition on an individual basis in your own personal life. You have a limited amount of time and probably a limited amount of money, unless if you're Jeff Bezos, but even he has a limited amount of money. But at the end of the day, you have to allocate your time, which is your resource in this case, in the best way possible. And this doesn't necessarily mean it's all about productivity. In the end, it's your best use as far as what they call utility, which can just be a different term for the term happiness. And that doesn't necessarily mean I'm going to do something that's the most productive. Just because the most productive thing I should do is clean the house and spend an hour doing laundry and cleaning, that's not necessarily my choice. My choice ends up being sitting on the couch and eating ice cream because that's what brings me the most happiness. So all of this applies in finances as well. So you think about it in terms of money, what brings me more happiness, a pair of headphones or a hamburger? Let's say that they're the same cost. I'm probably going to choose the thing that brings me more happiness, which in my case usually is a hamburger. So all of these scenarios work out pretty well on an individual basis, but it gets a lot more complicated when you think about it on a national or government basis. Just think about this with a group of friends trying to decide which restaurant to go to. You may not go out to a restaurant too often, so you want to really make sure that's a restaurant that you enjoy most, but yet the recommendations that everybody else is giving are recommendations that you don't necessarily like. And so you end up, spending 30 minutes just trying to decide which restaurant to go to, or you end up deciding it's not even worth going out with a group of friends anyways. Or in some cases, everybody compromises on a restaurant that no one's actually too pleased with, so you still end up going to the restaurant, but in the end, nobody's happy. And this pretty much illustrates how the national economy works to a degree, because everybody's pretty much arguing over the same amount of funds, and in the end, nobody's really that happy. You can make all the jokes you want about the Federal Reserve or the government being able to just make money out of thin air, but at the end of the day, every country does have a finite amount of resources. Just think about it this way. If a country sold oil and it uses those revenues as its funds to fund schools, then it has to decide how to use those funds. And because there's a limited amount of oil, then there's also a limited amount of funds. And so then you have to decide, well, do we fund all schools equally, or do we prioritize how we use those funds by, let's just say, for example, funding lower funded schools? So as you can see, economics can really be broken down to two different categories. You're dealing with individuals and small businesses, then you're talking about microeconomics. If you're talking about on a larger scale how nations work or how nations interact with each other, then that would be what it's referred to as macroeconomics. Now, I understand a lot of people can be turned off by those different terminologies because it just sounds like such big, scary words. But at the end of the day, it is important to understand so that way you can understand why, people have a distrust for economics and data. You see, with microeconomics and you're dealing with individuals and businesses, you can basically test things in a very easy setting, and you can kind of adjust small variables to see how it impacts different businesses and people. For example, I can have a group A of people and give them a set of $100 and see how they interact in a store, and give group B only $50 and see how they interact in a business or store, and see and compare the difference between the two groups. So in that example, it's really easy to control all the different variables, right? You can control people's education, their age, their gender, different things like that. But then you take it up to a macro level, or you're talking about a national level, it's a lot harder to control these different variables. You see, let's just take one example as far as taxing the rich and see if that improves the quality of life in that different nation. In an ideal setting, you'd be able to control all the different variables between two different nations and have one nation increase the tax on the rich. But obviously in the real world, this doesn't really actually work out that well, because one country will actually increase its taxes on the rich, but at the same time introduce some other new form of policy. And so then it becomes really difficult to compare two different countries. But even still, economists are pretty smart on figuring out different ways to account for those different variables. I'm not an economist, by the way, so I'm not that smart. But as I mentioned before, the way you survey and get different results and data and collect that data can actually heavily bias the data regardless, even if you're trying to account for these different variables. And on top of that, the way people approach economics can be very different. So a good example of how economists can have different approaches is some economists focus more on being descriptive and looking at historic data. For example, they care more about, take a group of people and figure out the average salary that they had in the past year. Versus other economists don't actually care what the group is actually making historically. They want to figure out what is the right amount that they should be making. So in this field, they actually break it up by calling it normative economics as well as positive economics. Positive being the one how it should be, normative being what it actually is. Now in this field, pretty much every economic study done out there, especially the ones that are introduced in the news, basically have a combination of historic facts as well as opinions on how the world should be, and that's how you end up skewing some of the data. You end up having somebody out there, some news reporter for example, giving some actual facts and data out there, but then they start to introduce tidbits of their own opinion, and so then you end up accepting that opinion as fact. Just an example of what I'm trying to get at. Remember how I was talking about economics is about the production of resources? That's how you end up getting this term called GDP, which GDP is basically just trying to show how much a nation actually produces. So then you introduce this question of whether or not do you include all production or just production that's law-abiding. For example, there is a lot of production that is done that's not necessarily law-abiding. But obviously those non-traditional forms of production do have an impact on the quality of life of people living in that country. So this is how you end up having two different groups or institutions survey the same country but end up having very different results. It doesn't necessarily mean one group is actually more accurate than another. It could just be the fact that they have different approaches and different styles on how they view that data. So basically what I'm trying to say here is the days of people having some kind of random article out there that supports what they're trying to argue is never going to end. So unfortunately, I just think this all means that there's always going to be a distrust towards economics and data just because of the inherent flaws in the way we view it. And it's not necessarily that economics and data is wrong, it's that you have people introduced into this whole entire process. And anytime you introduce people, you can pretty much bet that there's going to be some biases. That's it for this video. I understand that economics is not necessarily for everybody, but I thought it would be at least pretty insightful to understand what economics is all about, especially because it gets brought up in the news all the time. And if you like personal finance, business, or anything like that, hit that subscribe button to stay tuned for more.